Welcome back to the Market Manual, where we break down the market with clarity and confidence. In today's video, we are diving deep into one of the most powerful and misunderstood candlestick patterns, which is called an engulfing candlestick pattern. Make sure you watch until the end, where I'll also show you how I personally use an engulfing candlestick pattern. And if you are looking for a reliable broker, please use the link on my bio to sign up or open an account in XMS. Disclaimer: this content is for educational purposes only and does not constitute financial advice. Trading involves risk, and past performance does not guarantee future results. Always trade responsibly. Let's get into it, guys. As you all know, okay. An engulfing candlestick pattern is a candlestick pattern whereby, for example, in a bearish candlestick pattern, this candlestick pattern is whereby the body of the bearish candle engulfs the bullish candle. It engulfs the bullish candle with the whole body, with its whole body and its shadows. A bearish engulfing stick pattern is whereby the small bullish candlestick pattern is engulfed by the bearish Marubozu candle together with its shadows, as you can see. And on a bullish engulfing candlestick pattern, which is this one, the body of the bullish Marubozu candle engulfs the bearish candlestick together with its shadow and body, as you can all see over here. That this body over here engulfs this whole candle, and this is a bullish engulfing candlestick pattern, and this one is a bearish engulf. So with engulfing candlestick patterns, we have three types that we use. And those types, let me show you. As you can see, we have type 1. With type 1, you can see that the red candlestick and the shadow of the red candlestick, this upper shadow, it this shadow is longer than this shadow of the bullish candlestick, meaning it has engulfed the shadow, and also the body engulfs the whole candlestick. This is type 1. The shadow of the red Marubozu has to be higher than the previous candle in type 1. In type 2, both of these candles have to be bearish or bullish. In type 2, the shadow of the red Marubozu candle has to be higher than the previous candle. The shadow of the Marubozu candle has to be higher than the previous candle. As you can see, that the price, that this candlestick here closed on at the open of this. It closed at the open of this candlestick here, and this shadow here engulfs the whole body except for this shadow on the bottom. However, both of them have to be red. Have to make sure that's the most important thing when we type 2, that both of the candles have to be red or they have to be green, meaning bullish or bearish. Red for bearish, green for bullish. And also the shadow has to be higher than the previous candle. The shadow has to be higher than the previous candle. With type 3, and also type 2, the first red candle is smaller than the second red candle. The second red candle closes below the first red candle's low. The second red candle's shadow is higher than the first red candle's shadow. That's type 2. Type 3, the shadow of the first candle, as we can see this shadow, is higher than the shadow of the second candle, which is this one. The first candlestick shadow is higher than the second candle's shadow. And when it comes to type 3, you can have a bullish first candle and a bearish second candle. Or you can have a bearish first candle and a bearish second candle. And for bullish engulf, you can have a bullish Marubozu candle. You can have bullish first candle, bullish second candle. And also you can have bearish first candle and bullish second candle. However, the most important thing you need to note is this shadow of the first candle. If it's higher than the second shadow of the second candle, that's the most important thing you need to notice with type 3. And with type 2, you have to make sure that both of these candles are of the same color, and also the shade of the second candle engulfs this first candle. With type 1, you have to make sure that the shadow and the candle engulfs the first candle. The candle of the second candlestick is shadow and body has to engulf the first candle's shadow and body. So let's go into the charts and see some live examples. As you can see, this is type. This is type 3. This is type 3. The first candle shadow is higher than the second candle's shadow. And over here, we have another type over here. This is type 2. This is type 2. The second candle's shadow engulfs the whole body, and it is higher than the first candle's shadow. However, this candlestick doesn't have a shadow, but this is still type 2. Type 1, type 1. But this can be our type 1. Oh, okay. This can be our type 1. And this can be our type 1. This can be our type 1. As you can see, this candle shadow, this candle's body was engulfed by this second candle's body and shadow. But a clear one is this one. No, this one is type this is type 2. This is type 2. This one is type 2. This is type 2. Oh, okay, here's a clear one next to type 2. Here's a clear one over here. As you can see, as you can see, guys, this second candle's body and shadow engulf this first candle's shadow and body. This is type 1 of a bearish engulfing candlestick pattern. So how do we use this candlestick patterns to look for entries? Okay, guys, let me look for an example of a setup. Okay, here's a setup. This is what we do when we check this. As you can see over here, this is a QML. There's a breakout structure here. Price breaks the structure, and then there's a head, which is a high, a shoulder, which is a high, and also have a high over here. And in our high, as you can see, we have a bearish engulfing candlestick pattern. And this is type 3, guys. This is type 3. As you can see. However, price didn't come back. It failed to push to our entry. However, we have an entry over here. However, I'm still here. It still failed to setups. And here's a beautiful setup, guys. As you can see, price broke structure over here. Structure, shoulder, which is a high, a head, which is a higher high. And what's this, guys? This is a bearish engulfing candlestick pattern. And this is type 1, guys. This is type 1. Type 1, you can see over here. Fine. As you can see, but this was a clean cell. Clean cell. Clean cell. Clean cell. Another setup. Setup, guys. Let's check why price didn't come back to this one. Show. But we have something here, guys. We have something here. As you can see, we have something over here. Price broke the structure over here. And we have a head, which is a shoulder, left shoulder, and we have a left shoulder, which is a high, a head, which is a high, break of structure. And what do we have over here? This is type 3, guys. This is what we call a zero float entry. Price just touched and moved to the downside. As you can see, guys, this was a clean sell setup. Very, very clean. Very, very clean. As you can see, the price formed our reversal pattern, candlestick pattern. This, and then it came back, touched, and moved to the downside. This is a very, very powerful candlestick pattern, guys. If used properly and correctly, it has a win rate of 80 to 90%. Every time your setup has this kind of entry, it has an 80 to 90% chance of going towards your direction. That's it from us, guys. Till next time, please don't forget to subscribe, comment, and share this video with your friends. And don't forget, you can use the link on our bio if you're looking for a reliable broker. Till next time, peace.